If you've been following my channel, you know that my two biggest holdings are Halal ETFs, ISWD and IGDA. However, in this video, I'll be sharing another Halal ETF I have started to invest in and will continue to do so. I will be explaining my reasons and how much of my portfolio will be invested in it. So do make sure you stick around for the whole video to get the full benefit. If you do like this sort of content, then please hit the like button and subscribe to the channel, as I have more exciting content planned. And just a quick disclaimer, none of this is financial advice. This is what I'm doing in my portfolio, but it doesn't mean you should do the same, as your risk tolerance will be different. The ETF I'll be looking at in this video is the iShares Islamic Emerging Markets ETF. The ticker symbol is ISDE. Emerging markets are typically not developed countries, but they are in the process of experiencing significant economic growth. We can see that the ETF is currently down 8% from its inception in 2008, and if we look over a 5-year period, it's only gone up over 12%, and year to date it's up just under 9%. So why would I be investing in this ETF if the performance hasn't been that great, especially in comparison to other ETFs I've looked at on my channel? Well, here are some of the reasons. The first reason is the geographical exposure. Although the US and developed stock markets have performed well over the past 100 years or so, this may not be the case in the future. Therefore, I want diversification outside of these countries. And if we look at countries in other regions, they are producing good companies which are benefiting the whole world. For example, Taiwan Semiconductors is based in Taiwan and is currently the largest semiconductor manufacturer in the world. This also happens to be the largest holding in the ETF. Therefore, getting access to these markets means we won't miss out on any potential growth of certain markets, which brings me on to my next point, scope for growth. The scope for growth is much higher. We know how much developed markets have grown in the past 10 to 20 years. This level of growth is unlikely to be the same for the next 20 or so years, whereas emerging markets are generally in their early stages of growth, so there's more potential upside. Low PE ratio. This generally means a market is undervalued. However, for emerging markets, it could indicate higher risk or uncertainty. However, with high risk comes high reward. Dividends. This ETF does pay out dividends, which means I can get passive income as I accumulate shares over time. So these are just some of the reasons why I will be investing in this ETF. However, it's important to note the disadvantages of investing in this type of ETF as well. Emerging markets are generally risky in nature. We are not sure how they will perform in the long run. Also, their track record hasn't been too great, as it has underperformed the general market over the past few years. In this particular ETF, I would also like to see more exposure to the Middle East and other Muslim Asian countries, as I believe their economies are growing. Before I go over how much I will be investing, I will just take a quick look at the ETF in more detail. As we mentioned earlier in the video, Taiwan Semiconductor is the biggest holding in the ETF. Again, it's the largest semiconductor manufacturer in the world, so definitely a key player in the world economy in this sector. I believe Samsung is also the second biggest semiconductor manufacturer, so there's a lot of exposure to this industry, which has performed well recently. Samsung obviously also sells phones and other electronic devices. They are a competitor to Apple. These top two holdings account for over 30% of the total ETF. In terms of sectors, it is heavily tech weighted with over 40% in this industry. Most of this will come from the top two holdings. The next biggest sectors are materials and energy. In terms of regions, the top regions are South Korea and Taiwan. Again, this will be due to the top two holdings. There's also a fair amount of exposure in India. The expense ratio is 0.35%, which is high compared to ETFs and one of the highest in Halal ETFs, so do be wary of that if you are investing in this, as it will eat into your profits. The dividend yield is 2.89%. As I mentioned, I am happy this pays dividends, because even when the price is dropping, you can get that passive income. As we also mentioned, it has a low PE ratio, so this does look attractive, but this is due to uncertainty and risk of emerging markets. The average annual return over a 10-year period is almost 2% per year. So this is the average return you would be getting per year over 10 years rather than the total return in that time period. That's definitely underperformed the rest of the markets, and I don't think it's even be inflation. And over a 3-year period, you would actually be making a loss per year. Obviously, the dividends would contribute to any gains or losses, so do take that into consideration. So how much of my portfolio will I be allocating to this ETF? Well, given the risks, it's sensible to only allocate a small portion. At the moment, it is not even 0.5% of my total portfolio. This is because it's a fairly new addition, and I will be adding very small amounts every week as part of my pie. Also, just to let you know, I have created a Halal ETF Pie on Trading 212. This is a simple 3 ETF portfolio which covers the world markets while giving small exposure to emerging markets. If you are interested in copying this pie, then click the link in the description. My plan for the emerging markets ETF is to invest in it for at least a year and see where it goes. Even after that, I believe it will only be around 1 to 2% of my total portfolio. Some people generally add more to this type of ETF. However, I also invest in individual stocks, so I don't want too much exposure to risk. Do let me know your thoughts and whether you are investing in this ETF. If you made it this far, then I would really appreciate if you could like the video and subscribe. These videos do take a lot of time to research and edit, and best of all, it's free, so I would really appreciate any support.